Hi there, I'm Seb Maley from Qdos, and in this video we'll take a look at the recent spring statement and the key takeaways from Rachel Reeves' speech. Now, we obviously had the autumn budget back in October last year, where Labour made numerous sweeping announcements, and the government have pledged to have just one major fiscal event each year. We therefore didn't expect any major new surprises in the spring statement, but there were a few points that are worthy of discussion. Firstly, some would have been hoping that the government would have used the spring statement to reverse some of the more controversial measures announced back in October, but this was not to be, and tax changes like the employers' national insurance increases will still go ahead. There are, of course, always calls for the government to address the impact of the reformed IR35 rules, but these calls continue to fall on deaf ears, and the off-payroll rules didn't get a mention. We also heard nothing about the plans to simplify worker status, which was one of Labour's manifesto pledges, but as yet has not materialised and does not form part of the Employment Rights Bill. An overhaul of the frustratingly complex world of employment status is much needed, but both to address problems like IR35, but also in the wider context of employment rights. So hopefully it hasn't fallen off the government's agenda completely. In terms of new measures announced, the key takeaway is that the government is clearly doubling down on its quest to target tax avoidance and evasion. We already knew that they were recruiting 5,000 more HMRC compliance officers, and they are now adding a further 500 to that number over the coming years. They've also launched a number of new consultations, all relating to tax compliance, and are continuing to focus on avoidance schemes. One of the consultations is titled "Closing in on the Promoters of Marketed Tax Avoidance," and looks to target those actually running disguised remuneration schemes rather than the individual taxpayers. The fact that the government are doing this is obviously positive, but for those who have been caught up in the loan charge fiasco, it will undoubtedly feel like it's too little too late. There is also another consultation focusing on tax advisors who enable non-compliance, as well as measures to enable HMRC to better utilise third-party data and automation. All in all, it seems like the government see HMRC as a key weapon in both protecting and increasing the Treasury's coffers, and the tax office are certainly going to be very busy over the next few years. We'll keep you updated on any further changes and developments, so please subscribe to our channel, and we'll see you next time.